Hello everyone, welcome to our finance channel where we deep dive into concepts of personal finance and retirement planning with simple and easy to understand explanations. In today's video, we're going to deep dive into a concept that a lot of people who've already retired or those who are planning to retire in the next few years have asked. Should you keep your life insurance after you retire? Whether you're making this decision for yourself or for your parents, this video has a lot of interesting insights. Don't forget to like, share or subscribe to our channel for more insights and latest updates on personal finance. Imagine this, you have just retired and you have a list of things to do, a long list of places that you want to visit along with your spouse. You're looking at the budgets and then you suddenly see that this huge premium for life insurance is showing up and you wonder if this is really worth it. Now that you've retired, even if something were to happen to you, there wouldn't be any financial loss for the family. Should you just discontinue these policies? Let's find out. Financial support for a spouse. Ramesh and Meena, when they retired and they had a similar long list of things to do and they were considering whether to keep their life insurance or not. Fortunately, Ramesh decided to keep his insurances. Just 2 years into retirement, while they were happily enjoying their honeymoon period of retirement, Ramesh fell terminally ill and in just 6 months he passed away. Meena was left with no income source and this life insurance policy came very handy to her because she could collect this money and create annuities out of it. According to a study by IRDA, a staggering 70% of Indians have not more than 10 years of money put away to take care of their spouses if something were to happen to them. This makes life insurance not just useful but essential. Number 2 reason, easy transfer of assets. Transfer of assets in India can be tricky with all the paperwork and red tape. It may take anywhere between 6 months to 1.5 years with having to get the succession certificate, the probate for the will and a whole lot of legal documentation. Life insurance makes transfer of wealth a very smooth process because you just have a nominee and the moment the person passes away, the money is paid off to the nominee. This not only makes it hassle-free but also tax-free. According to Section 1010D of the Income Tax Act, any death benefit that a nominee gets from an insurance policy is completely tax-free in their hands. Number 3, preserving an estate. Did you know that 55% of retirees plan to spend a substantial portion of their savings on travel and leisure after their retirement? Now imagine a couple spend a lot of their money on travel and leisure and they don't leave behind anything for their children or grandchildren, but they want to do so. What is the way out? A whole life insurance policy can come in very handy here. They could spend all the money that they have and keep paying premium for their insurance policies. And when they die, their children or grandchildren can inherit a substantial sum of money. So they can leave behind something more than just good memories. Number 4, covering final expenses. In fact, Ramesh and Meena had a lot of their assets in illiquid assets like house and land and property. This made their medical expenses quite difficult to handle. They had to take loans, and when Ramesh passed away, given that the money was all illiquid, they didn't have much to pay off the loans or even for final expenses. Thankfully, this insurance policy proceeds came in and they could settle the hospital bills and the loans and pay for the final expenses as well. This would alleviate the need to sell off their assets in distress and suffer a loss on that. Number 5, compensation for loss of income for a pensioner's spouse. Another critical aspect for people who are dependent on pension income is if the pensioner passes away, the spouse gets only 50% of the pension that the pensioner was getting, especially for those who retire from the armed forces. We had a client who suddenly had to see her income drop 50%. It's not that her expenses dropped that much. Thankfully, because of life insurance, whatever pension loss happened, she could create an annuity out of her insurance policy proceeds and compensate for that loss of income. While the benefits of having a life insurance policy well into retirement is immense, the costs have to be considered too. While taking a policy, if your premium paying term stops at 60, while the life cover goes on till age 75 or 80 or 85, the premiums can be substantial. Here is a comparison of the premiums for key policies if you're paying till only 60 and the cover ends at 60, in comparison with if you're paying till 60 and the cover goes on till 70 or 75. In conclusion, the many benefits of having a long-term life insurance, like providing support for a surviving spouse, providing for loss of pension in case the pensioner dies, providing for final expenses, or also being an easy way to transfer assets and estate to your next generation. There are immense benefits in having a life insurance policy, so do not dismiss the idea of having insurance in your retirement. What are your thoughts on this? Do you think having a life insurance even after retirement makes sense? Share your thoughts in the comments below, and don't forget to hit like, share this content if you liked it, or subscribe to our news channel for latest updates.